Hey guys, what's going on? Welcome to the video. Hope you guys are well today. So today was October 22nd, 2020. A very interesting trading day, and for me it was a bit of a tough day. And there's interesting things about losing days or days where you lose money because they make for good content on YouTube. So that's the advantage of it, is that when I have a red day, often I have a lot of stuff to talk about in a video. And when things are going well, it's generally pretty boring, because trading is in fact pretty boring when you get the hang of it and you have your method that you do every day. But when you have a red day, it's kind of interesting because you can go back and analyze things more specifically. There's a difference between a red day with, say, a small loss where you're kind of like win, loss, versus a red day where you have 5 losers in a row. So that was pretty much my day today. I had 5 losers, and I had 6 trades. All of the trades were long trades in the morning, and 5 of those hit my stops. The other one was a break even. In terms of getting it wrong, I pretty much got it wrong today. And this is interesting because it doesn't have to do with your strategy, but what it does have to do with reading the market wrong and not being able to perceive the opportunity in that current moment. I will make the argument that it doesn't really matter how good you are or how experienced you are at trading. You could be trading for 20 to 25 years and still be caught trying to buy these dips this morning, and being caught on the wrong side of it consistently, because that's just how the market was trading today. So I can go into detail a little bit more thinking about, how this bear move in the morning managed to occur. In reality, the setup was there. I'll show you briefly my morning notes. Okay, so take a look at my morning notes right here. So this was this morning. I wrote this before the market opened, and I wrote this: the market is printing these obvious lows from 590 to 600 range. There's many buyers from the previous 2 days. They will likely puke if we start trading under 580. The bulls need to trade and hold above 757 up until about 770 to shift odds in their favor. And then basically, if the bears can control under 622, we're likely going to see 530, because that 530 was the high volume accumulation zone that had occurred about a month and a half ago. And then the last thing I mentioned was the one time framing down on the daily time frame, where you can see we have 7 days in a row with a lower high every day, unable to make a higher high at any point, and then today followed by more weakness. And here I was in the morning with 6 trades, all of them long trades. So basically I got caught in the noise and trying to go long. Part of the reason why I got caught in it is because the market was sort of in the trading range where it looked like it wanted to stay. It didn't look like it wanted to immediately flush down and take out all those sell stops underneath the 590 zone. And I think that this is where I got it wrong. Within all of this talks, it's going to be so hard to avoid hindsight because now it happened already. It kind of makes some sense when you try to analyze it from, a bigger perspective. And I said it in there. I said there's a lot of liquidity in the last 2 days that came into the market, mostly on the buy side. If you were watching the last 2 days, buyers were not sitting there keeping their stops, right close by. They're putting their stop under the lows, and those obvious lows that are forming around the 590 zone. And again, all of that combined, market loves to test obvious lows and highs. These last 2 days of liquidity in the market, I guess that was enough for the market to give it a nice push and to basically trend lower all morning. So as the market is trending lower and lower to the lower part of the trading range, more people are saying, uh-oh, I better sell or hedge. And I guess this adds to the amount of selling we get until we finally have enough liquidity to kind of drive it all the way through the lows. And this is one way of looking at it. And again, it's so hard to avoid hindsight with what I'm saying, but there's some truth to what I said, in the sense that the market had enough liquidity to trend lower and just take out all those sell stops all morning. So if you look at what the market did in the morning, created a nice single print right there at 663. And then we continued to trend lower until it really flushed. I didn't watch the flush after that, but basically it traded all the way down to that 530 zone that I was talking about in my morning rundown. I wasn't a part of that because I was out of business before that. In terms of the analysis, there was nothing wrong with it. Now, in terms of my trading decisions, I don't think there was anything wrong with it either, except that I was just wrong, completely wrong in trying to buy some of these dips. And it plays into the deception game that these market game makers are playing. You can see it just by looking at this price action. You can see we sell off, the sellers are in control. The sellers are in control, small rally, gets sold right away. The buyers are coming in, all right, double bottom, more sellers waiting. We see a little bit of a bull flag print there. I got confused by this one, and I was trying to go long here and see a possible print above 700 for a little bit of a mini short squeeze. We did not get that. I got stopped out on this long trade, and then you can see we continue to trade lower, and I believe I traded this twice here at this point, and I was trying to lean on this. In reality, there's no real good support here. So what I need to improve on, okay, because my trading is a two-step process. Number one, the level and the price to do business, and number two is the bias and execution. What I need to be more crystal clear about is avoiding low quality trading setups by filtering out and being extremely clear with my trading biases based on my levels, okay? So I didn't have any of these levels marked in. So at this point, I tried to go long off of that 680 because it was providing some sort of small support zone around that 680. But you can see that when we traded it, there was no real support there. This was just to deceive traders into going long, so that way there could be more liquidity when we break these lows. And they do it when the market is trending higher as well. They get everybody short, and then they get you out of it really quickly when the time is right. The same thing like this, you get these massive rallies, looks like it's gonna go for a second leg up, nope, no more demand, and then we slowly fade, boom, take out the sell stops, make it look like another rally is gonna happen, chop it, and then boom, take out more sell stops. Sooner or later, these longs are puking out of their positions, me included. So again, I'll say it, any traders who didn't use a stop going long today really got burned. I do feel bad for you, but that's the lesson you have to learn. Unfortunately, I've been there myself, and you need to get there. You need to be in that situation to know what it truly feels like, where you're just being driven by emotions completely and you almost have no control of your decisions at that point. It's a really negative thing. That's trading for you. You decided to do this, so you put this onto yourself. Here you are watching this video, fine. So back to what I was saying, being crystal clear with these biases. Now, in regards to identifying levels, it all comes from the market profile and single prints. So through all this morning action, there's no real support in all of this, okay? There's the illusion of support that's being created. So two things I'll say here. Number one, I'll say I got this from a video from No BS Day Trading. This was a very important point he made, which is getting in the feel for what kind of day we're likely going to see. What is likely based on what's happened the last 2 or 3 days. In this case, I was not in the flow with the fact that there was enough liquidity in this market to continue trending lower and just go ahead and take out those lows. And I honestly think that a lot of traders were not thinking about that either. Or at least the crowd was not thinking about it. The next thing I'm talking about is being more crystal clear with my biases in terms of market profile levels, not being deceived into putting on trades around these lesser important levels, right? So, if you're scalping off the DOM, you can take trade after trade after trade and scalp off of these minor levels. That's questionable, and it has to apply to your strategy. So, some traders that are purely DOM scalpers, they can sit there and just scalp the thing, okay, support at 680, there weren't sellers at 680, okay, I'm gonna put on a long here, stop right there, let's fade it back to the moving average. Fine, if you caught that, good for you. I honestly think that there's more of an advantage to having your levels set and being so crystal clear about those biases when you're putting on the trade. You know exactly where you're leaning on and why. You're not just leaning on a price because you saw it provided some support once or twice. Being clear on those levels is probably the most important thing. And again, that's why I think there's a danger in trading just off of the DOM itself, the DOM for execution. If you don't have your levels in play, how do you know if that level is real support or not? And again, it depends on your trading time frame. If you're doing HFT, then fine, maybe that's different. In this example right here, I'm looking to lean on around this 680 because I can see that it was providing some support here, and then again here. I was seeing no selling below 680, which is why I was looking to lean on that. But in reality, that 680 price had no real significance. So I was deceived into thinking it had significance because I was paying too much attention to the DOM and not enough attention to the crucial levels that I mark in every morning. If there's anything I can learn from today, it's that I need to spend more time filtering out lower quality trading setups. And how I do that is by focusing on the important price zones versus the lesser important price zones. And how I filter that out is technical. It's related to market profile, single prints, and one-time framing. And if you guys want to learn about that, go watch E-mini-OS channel, because I'm not going to tell you about that in this video. That's not my job right now. So that was my day today, guys. You know, 5 losers, all of them hitting my stop, and then I took it and left. That's how the cookie crumbles. My account is back to where I started, unfortunately, and we're just gonna continue doing what we do. Try as hard as possible to focus on being much clearer with our biases. That way we can filter out lower quality trading setups and not be swept in to the crowd and be deceived by these typical market movements. Easier said than done, guys. If you have any questions, leave them in the comments below. I wish you guys all the best. Take care. Bye.